What you want from an advisor is just to look at after fee returns. Doesn't matter what, charge me 50% fees. I don't care. Just show me your after fee returns. And that's all that really matters.
We're in reporting season. People listen to this, their stock's going all over the place. What's not going to work, Benny?
High expectations and poor quality products that have been dressed up financially.
Does that annoy you, by the way, when your companies get taken over?
No, I make money and I get paid a fat performance fee. You beauty. Do you know what I mean? Like
This irritates me on because some fund managers will whinge about, oh, now we'll have to find a replacement business and high quality businesses are hard to find. Well, it's like, well, maybe, but also the fact that you can't identify another business to invest your money in at a high rate of return for your investors, that's a bit of a red flag to me.
Pretty sure that's your fucking job.
Welcome to this episode of the Australian Investors Podcast, joined by Luke, aka Dome. How are you, mate?
Rasky, happy to be here again.
As always.
No Peroni, as usual. I've noted.
Yeah, I did have a water though. Yeah. Keeps you sharp. And speaking of a man that was in water recently, back from Greece, Ben, how you doing, mate?
I'm good, thanks.
It's quite a good segue from you, Rasky. Those people who say you're not a professional.
He's been thinking about that one for 2 months.
I just had this picture in my mind because every time Luke's been on the show since you've been away, he's just been sunning himself on a rock.
Yeah, not sure where that image is going from.
Yeah.
14 Greek women surrounding him.
Yeah.
That's their setup.
Yeah, he's come back to Melbourne where it's obviously really sunny and hot. But we were just talking off air about fees. So I made a joke to you guys. So in the small companies fund, you guys don't have a management fee, but then you said, the benchmark's RBA cash.
The hurdle's RBA cash.
And I was like, that must be nice.
The benchmark's the small odds.
Yeah. So is that good or bad?
Well, we don't charge a management fee. So, it depends on your market and who you're trying to sell to. But for us, we sell our product door to door. And what I mean by door to door is we sell it like this.
Yeah.
We talk
podcasts,
to direct investors, family offices, and those people like to pay for performance. They don't like paying fund managers or anyone else to sit around and diddle their thumbs and not make money for them. So, having a fair, long experience with those sort of investors and being sort of one of those investors myself and investing in the product myself, I was like, well, what fee structure do I want to pay in my super fund?
Yeah.
And so I was like, well, what about zero? And then if you make money, take 20% of it above the RBA cash rate. And if the cash rate goes lower, great. We'll probably end up making more money in the fund and we'll take a performance fee. If the cash rate goes higher, then you got a higher hurdle and you got to make sure you're making people money and you're adjusting for those cash returns they could be otherwise getting, not investing in the product. So pretty straightforward. I don't know.
Still a high watermark. I mean, the key is, if you lose money for investors and you've got a performance fee over the benchmark, which has also lost money, and some funds don't even have a high watermark, you're taking fees on negative returns. So, I mean, that's probably one of the things that resonates really strongly with clients, I reckon.
100%. I'd say it's probably the most popular feature of our fund, obviously, like the return after fee.
I'd love to know management fee. Yeah.
After fee returns are great, obviously, but and we report everything after fees anyway.
Yeah. So it's almost irrelevant in the sense of
the fund's done 55 cumulative return over since we started, and that's after fees.
That's after fees.
So I've got the raw data. It'd be too spivvy of me to tell you what the actual returns are of the actual portfolio. Yeah. No fees, but rest assured that Ben and my money is the same units that everyone else. We only have one class of units, and everyone gets charged the same fees and everyone gets the same returns.
So we are going to talk about companies and reporting season and all that mumbo jumbo in just a minute. But so that's interesting. So you just said one class of units.
Yeah.
As if there was something else that happens in the industry.
There is.
Yeah. So I know like omnibus trust or whatever, just not to be too blah, blah, blah. But I know that there's like different.
Every strategy has multiple classes normally of units. So they'll have like a W class, which is typically a wholesale class.
With discounts and lower fees.
And it'll have a lower fee attached to it. And then every private wealth group who's got, depending on the size of the fund, 100 to $1 billion to allocate to that particular strategy, they'll typically negotiate a different set of fees, potentially for their clients, which I actually think is terrible. Even though you think, I'm getting a lower fees to get into that product, but because you've negotiated a lower fee to get into that product, when you want to change product because you don't think they're doing a good job or whatever reason, your advisor's not going to tell you to change because they've got to go and renegotiate another deal with the next guy. What you want from an advisor is just to look at after fee returns. Doesn't matter what, charge me 50% fees. I don't care. Just show me your after fee returns. And that's all that really matters. Yeah. So I think people get way too focused on paying fees rather than making money. We're not in the business of avoiding fees. We're in the business of making money, whether it's ETFs, whether it's active managers, whether it's paying advisors. The game is after fee,
value add,
after fee returns. Now you can do that after tax or before tax, doesn't make a difference. But the point is that you've got to just compare apples and apples. And the easiest way to do that is after fees, which, while I'm on my soapbox here about this, is why I get so pissed off when I see in the AFR them running the Mercer survey, which is designed for institutional clients who negotiate their own fee structures, running before fee tables of top 10 managers. It's absolutely ridiculous because for every one institutional investor who's reading the AFR that morning, there's 5 million people who aren't institutional investors who are going to go out and go, oh, Fund XYZ topped the Mercer survey before fees, not reading a little before fees next to it. I'm going to go and put money with them, when in reality, after fees, they wouldn't even be in the top 20.
Yeah. Really important. No, I think the zero management fee is awesome, by the way.
Look, I like it. It suits us. I mean, yeah. I think if we've had a couple of institutional investors approach us in the last 6 months or so, they probably want to negotiate their own fee structures. They like having management fees, and they want you to have a management fee on your product. So, well, that's the feedback they've given us. So, I mean, sure, if you want to give us $300 million, we'll give you whatever fee structure you want.
Yep. Okay. So, reporting season is upon us, gentlemen. And I'm glad we've got the man with the laptop here. With all the data.
I thought I'd bring it along to show that, we're crunching the numbers over here at Seneca.
Yeah, this is your quant.
Just got YouTube up. Yeah, not even really.
So we're going to talk about what worked last reporting season, what's working at the moment. Actually, yeah, you got a couple. I saw the takeover that was
Infomedia.
You put it in the on LinkedIn. What's not going to work as well. So those three categories. It's early reporting season at the time of recording. You tend to get that third.
The 13th.
Yeah,
13th of August.
You get that third and fourth week, things start to get a bit fun. What worked last reporting season, Benjamin?
Well, I reckon the key for us, which we've spoken about before, is this inflecting profitability theme. Catapult, CAT was one example. Megaport was another. Energy One, another. And the common trend amongst all of those was low expectations. So both in sell-side analyst numbers, consensus numbers, and buy-side expectations, like what are other fund managers kind of expecting? What do they own? You often get these really crowded names that miss slightly and get whacked when they trade on the market. And the reverse is kind of true for under-owned names. So that was one thing that worked quite well for us, and I think it's quite applicable to this reporting season as well. So we can touch on a couple later. And another theme was cyclical recoveries we found. So again, it's just kind of these things that aren't really priced. No one's looking at the data. A good example is like XRF Scientific we've spoken about before. They've had another bit of peer data that's kind of showing that the cycle is really supportive for them. Imdex is another that performed well in February on the back of gold exploration data. That's now really starting to pick up as those miners get more cash in the bank account, and it's quite cheap to drill out resources versus buying existing resources. So a couple of themes there.
Takeovers is the other one.
Yeah.
So you kind of touched on it. Last February we had De Grey go, and this reporting season already we've had Infomedia go from our portfolio.
Does that annoy you, by the way, when your companies get taken over?
No, I make money and I get paid a fat performance fee. You beauty. Do you know what I mean? Like
this irritates me on because some fund managers will whinge about, now we'll have to find a replacement business and hard quality businesses are hard to find. Well, it's like, well, maybe, but also the fact that you can't identify another business to invest your money in at a high rate of return for your investors, that's a bit of a red flag to me.
Pretty sure that's your job. Your job's to go. If you don't have good investment ideas all the time, maybe find a new job. Like it's like if Ben didn't have good ideas, he'd be looking for work. He'd be working at Rust selling ETFs. Like it's.
You guys did top up on XRF recently, yeah? You said that last time we got up.
Yeah, not recently, but we did buy it a while back. I think $1.55-ish.
Yeah, because it's May, June. It was $1.50, $1.60.
Yeah,
and it's now back over $2.
Yeah, I mean, great.
Is that just that's a sentiment, right?
I think it's earnings. Ben will explain probably better than me.
Well, I think sentiment, but also there's been some data points that have come out, and now people are starting to catch on to what we were slamming the fist into the table about 2 months ago.
Because I called it cyclical, and you guys were like, "Hold on a second."
Getting all defensive.
Yeah, it is. Okay, cool. So the other topic, Benjamin, which you supplied to us, is what's working at the moment. Like if we're sitting here in the thick of it, this episode's going to go live in a few days. What should people be focused on?
Well, on the inflecting profitability theme is probably the first one to talk about. Qoria, QOR. We've
never heard of it.
Spoken. Well, it's the old Family Zone.
Family Zone, remember that?
Oh, really?
Yeah.
So
get ready. I used to slag this business off so hard.
So Luke's been slagging it off, and I have as well, to be fair. But over the last couple quarters,
they've really got their act together.
Yeah.
Like undeniably so.
I remember in February we spoke about it and I was like, this might be a business having another look at, dusting off the file. And Luke was kind of like, it's not quite there. It's a bit of a dog, etc.
And then Ben was on holidays and it reported and I was on the call. I was like, we need to own this now.
So this is the key, Owen. I've got to trick Luke into thinking that they're his idea.
Exactly right.
So wait, we just start with what it does, actually.
So family safety, cyber safety, they sell software to schools, essentially things like internet filtering, monitoring, web page monitoring, all those kind of like families, parents can use it as well to make sure that the kids are not up to no good. And I think this cyber safety thematic is where a lot of dollars are being spent. Regulatory support is getting behind, because in the digital age where every kid has a internet connected device, it's probably one of the primary areas of safety where you've got to be concerned about. And it's kind of nascent because it's only been around 10, 15 years as a sector. So
the man with the white van is now on the internet. You know what I mean? Like
essentially, it's a serious issue. So schools have large budgets to deal with this. Business was actually founded by Tim Levy, who I believe he had a family story relating to cyberbullying, and so started up this business. And essentially they've been building products and bought a couple of products and building out a full suite for schools to use. And it's
a lot of parents listening to this will be like, oh, this is interesting.
Well, it's a bit like the Life 360 kind of thematic where, parents are really concerned about what the kids are up to and making sure they're okay.
Whereas Life 360, if the man with the van comes along, you'll just know where the van is.
Yeah.
You know what I mean?
You won't be able to block the digital van, essentially. Yeah. So it's kind of slightly different, but sort of similar.
It's nearly $900 million. It is a $900 million business.
Yeah. So it's kind of at that sweet spot. We've spoken a bit about those kind of 300 to 500 mil market cap businesses, demonstrate sustainable growth, get towards that $1 billion range. Then you get index inclusion, passive buying.
Yeah.
And that's kind of when you want to be
bigger funds chasing the sort of traditional earnings growth story.
Yeah.
So now it's become
an earnings growth story.
A loss maker to a traditional earnings growth story, and you're getting fund manager institutional buying. So it still trades on a relatively attractive valuation.
So you guys did buy it recently when you jumped off the call?
Around that time.
So we bought it and it's gone up like a fair bit since then. So
it's gone up, but as Luke said, it's like like we said with 360, Catapult, these play out over 2 years where people start to realize that this is not a loss-making dog anymore. And it's actually a high growth kind of upsell, cross-sell.
Not late to the party here at 69 cents or whatever it's trading at the moment.
Yeah.
I don't think the valuation's stretched at all. And that's just on where the earnings are now. And the earnings are probably going to be, I've never been on a conference call. Well, I had to lie. I've been on very few conference calls that I came off feeling more confident in our estimates.
Oh, really?
It was a really positive conference call on the back of their result. And yeah, they're kicking ass and taking names by the sounds of it.
So is it like selling via subscriptions, like 70% margins? Or
Yeah, recurring revenue software, usual Seneca playbook, right? Like it's.
How do I not know? How did I not know that this business was making a comeback? This is a really cool business.
Yeah, it's in your wheelhouse.
It is in your. It is a bit. It's a bit of
RPM Global for families.
It is a bit of a PAO and special, but
well, yeah, I get all my good ideas from you guys anyway.
Yeah,
so.
I was going to say.
I'm glad you came today. But so this business. When you said quarterly, that was the last quarter, but
that was the June quarterly, which they reported at the end of July or whatever it was.
Yeah.
So it's a bit of a when I say reporting season special, it's actually kind of already pre-reported. So hopefully there's not too many surprises in the full year numbers.
Yeah, cool.
I think a lot more people will come onto it on the back of the full year numbers, because you've got a full set of accounts there.
Yeah.
All of the software gets updated. The fact sets and Bloomberg's get properly updated.
Yeah.
Management will be out reiterating. And I think that the key thing here is I think for a long time people thought, sure, this business is going okay, but they need to raise.
Yep.
And I think management have now pretty much put that to bed. And I think they're going to put it to bed real publicly now in August. And that could be a catalyst. This thing's going to $1 in my view, like no stress.
Interesting. EROAD. We talked about this not too long ago.
Did we? No, we wouldn't have talked to you about this.
No, I think we. Oh, maybe it was Mitch bringing it up to me. Maybe I'll just throw him under the bus. Do you own it?
We're very secret squirrel at Seneca. We only tell you about stuff we're interested in telling you about. So we've owned it, but we definitely wouldn't talked about it.
Yeah, I don't reckon we've
deliberately not talked about it. So,
really?
Yeah, we do that all the time. We're doing that right now.
No, yeah, but I thought you told me about it. I thought maybe it was someone else. Maybe it was Drew.
I can't remember, yeah.
Drew can't even spell EROAD.
Drew's talking about the Commonwealth Bank buying or something.
Yeah, he's taken a pun on that. And in video, his two original ideas.
Okay. Yeah, fantastic. Thanks, Drew.
Yeah. So this is the Kiwi business that does like traffic, like, I don't know what you call them, like cams, dash, and recorders for like, what do you call it, like the levies and the rego that they pay on trucks and that sort of stuff?
Yeah, fleet telematics.
It sounds fancy.
But it's all that stuff.
Yeah.
As you said, it was a great business born out of New Zealand, dominant market share over there. Did an acquisition in the US, expanded to Australia, didn't go so well.
Went a bit sideways for a while there.
Company balance sheet was kind of under stress. Stock price went down. And it's a classic just shifting of the narrative. Like this was a super high quality compounder.
Yeah, it was. Yeah, I remember it. Then it just imploded.
As all these kind of names go from...
There's probably 6 of these we can pull out of our portfolio right now.
Yeah. So. Yeah.
But yeah, it's reached a really interesting point over the last sort of 6 months where they've been doing all this CapEx to upgrade their telematics hardware and software onto 4G networks because they had a lot of 2G and 3G stuff that the networks have phased out, and so they've had to upgrade them
and make money.
Yep.
Spend a lot of money there. So it's made the numbers look pretty sour. And it's another classic one like RPM Global where the true underlying quality of the business is improving and the financials don't look that good, doesn't show up in stock screeners, starts to become a bit of an opportunity. Then they reported some really strong free cash flow. And yeah, there's like no stock available in the sense that you go on the screen and there's just like on the asks there, barely any stock. As Luke always says, no stock here, Robbo. No cash here, Robbo. But fortunately, we were able to secure some stock in the fund.
Well, you guys buy it somewhere else or?
No, we were a bit early.
Yeah.
So we were a bit early and I executed this. So it was like, I'm trying to think now. But I think we were just early. There was still a bit of Neville Bartos about it in the sense of...
He's the execution lord. If there's stock to be found, Luke Laretive will find it.
I managed to sniff out some stock. So I made a few phone calls and put my stockbroking hat on again and just... broke my way out of a bag.
So for people like myself that have never been in that world, but also for other people that don't even know that this exists, can you talk us through that? Like, so you guys are fund managers, right?
Yeah.
But you can also pick up the phone and be like, I want to buy EROAD. There's no stock in my ComSec screen, right? Or whatever
Well,
the hell
there's
you're
stock,
using.
but it's like low volume,
Yeah,
right? You know, I want to buy
there's like 50 grand's worth.
$1 million
and
worth of
you wanna
stock.
go
Yeah, and I can buy 30 grand on the screen, or there's 30 grand at reasonable prices.
So then what is that process of going, like, you call someone, they're like, yeah, I got some shares, bro.
Oh, you have a look at, so what I typically do is I'll have a look at which brokers are like active in that particular stock over the last 2 or 3 months. And then I'll think about who's active and why they might be active. Now, you know, there's different reasons why different brokers are trading in different shares, but normally between what we know about stuff, the research, we know about the register, and what I can see on the screen, like trading every day when I'm watching it, we can kind of deduce who to ring first and where to go. And then you got to play the coy game of, I wouldn't mind buying a few shares in EROAD, but I don't want to overpay. You got to play the negotiating game, because if I ring up and say, look, I want to buy $10 million worth of EROAD stock, and ring a broker and tell him that,
They'll be like, all right,
cool, I don't have any stock for you, hang up the phone and go bid it.
Yeah.
You know what I mean? So it's a bit of a tricky situation. If I'm like, oh, look, I'm happy to pay up to $1.50 and it's trading at $1.30.
Yeah.
Well, you know, it just depends. So yeah, it's just the dark arts. Like, you just got to be able to do it. So
then from the moment that you both agree on like $1.40, say, right?
Yeah.
Then what happens? Did that person go into their account and they put it?
So I'll just go on my iris and I'll just be like, okay. I mean, I think in this case, there was some stock there that we bought for a while, and then I just stuck it in the algo. So like, there's an algo, I can just click it in the algo trader, and then it will just stay there and it will trade, you know, a particular rule that I want it to trade.
So often if you're at home trading and you see one share getting traded,
that's the algorithm.
That's the algorithm, which is often an institutional tool to accumulate stock without moving the price too much.
Yeah. So
then that the geezer on the other end, he's gone.
He wants to sell, and then he puts his 20,000 shares on to sell or whatever, and my algo can see his line and go, oh, that's what they call dumb money.
Yeah.
And so dumb money, and then the algo will just pull back all the volume, let him bid it down, and then hit it like slowly over time as he gets frustrated.
Yeah.
Trying to sell his stock that day because he wants to get paid to pay his, you know, insurance bill or whatever.
That's fascinating.
But if you do your broker to broker trading, then you can just transact a line which doesn't
move the price.
People won't go in the screen and put 1 million shares in of.
So then you would just be like, to that guy, you'd be like, hey, man.
So you just do a crossing or a give up. Yeah. So
that's how all the larger fund managers will have to trade.
And you'll see them after market sometimes. You know, they'll trade 40 million shares at a price, and that probably doesn't just go to one person. You know, or maybe it's Vanguard or whoever it is to top up. Then it might. But typically, a broker will ring us. Well, I mean, brokers ring us every day, and they'll be like, hey, you know, we're trying to put together a pool of money for $10 million worth of XYZ stock, and Benny will say, yeah, all right, let's bid for we'll take 500 grand worth.
Yep.
And then we'll bid into that little book, and then we'll be with 4 or 5 other funds, and we're buying off State Street. You know what I mean? Or some seller. Yeah.
Yeah. Fascinating. Because that's a big problem, like, and it's a big advantage of being in small caps.
Well, often those lines come through discounted from State Street. So we'll get a 5 or 7% discount to the current trading prices, or the VWAP for the last 5 days, or whatever the particular deal is, how the deal's structured. So it actually, you can create sort of alpha essentially
just by having
being
that
around. Yeah. And people also, like, if you're a stockbroker or an investment bank and your research department's covering a company and they've got a buy recommendation on it and they're probably going to do the next cap raise, they don't want to give that stock to someone who's just going to flip it for the margin of 5%, because it's not doing the company any favors.
Yep.
So that, you know, it's about having a decent reputation of not being a complete prick about things as well. And, you know, letting people know that, okay, look, we're not going to be here. We're here for a good time, not a long time, or no, we like this thing long term. We've already got a position. We're trying to top up or whatever. And just being a trustworthy counterparty as well. I think we try to be as secretive as we need to be, but also
transparent.
And, you know, at Seneca, we're pretty straight shooters with our counterparties. We're not trying to sort of trick people into doing things they maybe otherwise wouldn't.
Yep, cool. Just maybe we'll go to the takeovers in just a sec. You've left a note here, Ben. It says there's 2 more stocks we're buying right now, sub 1 billion market cap. Can't tell you.
Yeah, because I wanted to put them in here and look. So no, don't have to give everything away. And
don't give all the secret sauce away. That's what the fund's for.
Correct.
Yeah.
Yeah, I mean, you guys get enough free shit out of us as it is.
Yeah, it's bloody nice. SiteMinder though, that's a good one. SDR.
Yeah, I mean, even
Didn't
this
I say don't tell you about that? What am I paying?
Let me just give 2 to 3 quick sentences on it, then we can move on.
Yeah, okay. Then we'll talk about Infomedia.
Yeah. So another software business listed in market froth in 2021 has since pulled back and it's kind of been going sideways for a couple of years. It's in the travel space. It does kind of B2B.
Like channel manager for like software for hotels and motels and stuff. Isn't
Exactly.
Yeah, it's like the web beds, but sort of different.
Yeah.
So, yeah, I mean, the key for hotels is you want to maximize your utilization. These guys have software tools that enable it. It's been investing in a couple of new products and it's kind of hitting that, again, broken record, inflecting profitability, operating leverage part of the business cycle. And it's kind of been forgotten about. So it trades at a pretty discounted valuation, despite the fact that it's actually grown 20% per annum for the last few years. Now it's hitting operating leverage point. So expect those new products to kind of come through and generate good sales. Expect a lot of this investment to roll off that they've been doing to try and go higher up the hotel chain, which involves things like discounting. So yeah, let's see how that reports. But peer data tells us that the sector macro is looking pretty good. SiteMinder's it's 80% recurring revenue SaaS, 20% sort of transactional depending on bookings. So we could get a little bit of a kicker there.
TripAdvisor good, Expedia good.
I was going to say,
recently.
because like for people that are listening, that's the type of thing you're looking at. You're looking at those other companies that are reporting in that sector as a leading indicator for what this company might report.
Leading indicator is probably too strong.
Yeah, because it's not direct.
As like a bit of a vibe.
Your vibe.
Marbo the vibe type sort of setup. Speaking of other great Australian movies. Every time I come on here, I end up doing movie quotes. It's not true.
Okay. Yeah, great. SiteMinder, because it was like for a little while there, it was it had a few hairs on it.
Yeah,
I'd say.
agree.
Yeah.
Never owned it before.
Yeah.
The other one that Ben's not talking to you about's also had a few hairs on it. If you're a real deep Seneca watcher, you'll know we've picked it perfectly before. On the other side, on the wrong side.
That's a subtle clue.
Okay.
Just a
Interesting.
clue-
There's a bit
clue
of a
for
clue.
previous
Leaving clues in the comments.
clues, but yeah, we've now bought
Broadest
it.
investors, Seneca.
Yeah, now we've bought it after telling everyone it was the most expensive thing ever.
Okay. Most expensive thing ever.
Down
The clues.
down like 75 or 80% since then.
We'll talk afterwards.
Now I'm going to be thinking. Okay, Infomedia. IFM got a takeover offer. Not from TPG Telecom, I heard, which is the joke, according to Rob Milner.
It's a joke unless you're an ASX shareholder. That was
basically
a certified shit show. That was.
Yeah, so the ASX Infomedia put out the announcement. They got an offer.
Yeah.
And then the ASX incorrectly said that it was TPG Telecom that was buying Infomedia, which is a totally different business.
TPG Private Equity is a private equity business, and TPG Telecom shares fell 5.5% immediately because everyone was like, why the hell is a telco buying Infomedia?
Like it's close, but it's not quite
It's
close.
not that close. Yeah. And then, correction. And it was all tagged wrong on Iris and, wasn't... not pretty. I mean, 5% of TPG is a pretty decent lick of money, I would suggest. So, very unfortunate set of circumstances, but fat fingers errors, they happen.
And it doesn't matter because you guys have got the takeover and you're
We don't own TPG, we own IFM, so we don't care.
Yeah.
Fortunate for us. This is a niche software business, pretty boring. Spare car parts, dealers, inventory catalogs, things like that. It was profitable. What is profitable, trading dirt cheap.
So cheap.
16 times PE, I think it was on pre-bid for a software business, which is a rule of 40 company. It's had a takeover bid or takeover
three
interest.
takeover bids before, or sort of semi-bids before.
In 2021, 22, I think it was, at about $1.70, $1.75. This was trading at $1.20,
20, 25.
$1.30.
We only bought it like...
$1.20, it's gone to $1.70.
We only for 3 months or so.
Only owned it for 3 months. So we have been fortunate here, for sure, in the timing at least. But this is just kind of one of those ones where if it's boring, it's not going up. Therefore, fund managers don't want to pile into it.
But again, it's,
retail doesn't care about it. Yeah.
But if you looked at the last result, you can see the cyclical upswing in their business. You can see the way that their capex is rolling off and their profit. So the people who are buying, the private equity company who are buying it are kind of doing what we do all the time at Seneca. which is try and find businesses where the first green shoots are there. Now, in this particular instance, they've taken it off the boards. They're going to grow it for another 2 or 3 years and then probably try and flip it to someone else.
Yep.
But, we talk about cyclical recoveries. We talk about inflecting profitability. We talk about growth at reasonable prices. It's all just for you. It's all just for marketing.
You're just giving us the
same.
jargon.
It's just the same. I mean, we don't think about investing in these ideas. We invest in stuff we like from a bottom-up perspective that we think's good for a reason, and then we come to you after the fact and find a box for it to fit in. So doesn't surprise me at all that private equity have bought this because it makes a lot of sense.
Yeah, rock solid balance sheet as well. So often they're looking to
establish
gear these
business
things up. Yeah.
I feel like I bought in Infomedia like 10 years ago. Had a good run. Yeah, it did. I probably didn't get all that on the way up, by the way, but it probably fell after I owned it. But
you are the Gordon Gekko of Queen Street.
I'm basically, yeah.
Wouldn't surprise me.
As long as it's not the Jim Cramer. Mad money, here we go. Takeovers.
Start calling you GG from now on.
Antipa Minerales, AZY, ticker symbol. I was messaging.
I'm going to be more serious when I come on here. Stop taking the piss so much.
I was messaging you the other day about this because Greatland, which is you set out the thesis as like Greatland should buy Antipa.
Now they need to.
Yeah. And yeah, you were saying that it was an absolutely horrible
I'll let the guru do it because I've ramped this to death.
Well,
go on.
Luke and I were sitting on the Greatland Gold quarterly production.
GGP.
GGP. Yep. It's just listed on the ASX.
It's been listed for all of 6 weeks.
Brand spanking new.
Yep.
$3 billion plus market cap.
Every fund manager all over. I think our man on the ground told us it was the most well-attended site visit he's ever been on.
Oof.
So that's a reddest of bright red flag.
And no one had ever heard of Antipa.
And no one had ever heard of Antipa who was there. So it's you guys are
right next door.
all asleep. You need to stick red flags in everything.
But anyway, we went on this call and it was just a debacle. Production that they've said in their prospectus just a couple months ago was below
20%
expectations.
Off. Yeah.
Grade reconciliation issues. So these already low-grade ore bodies of 0.7 grams a tonne is now looking like 0.6 grams a tonne. They're having to re-drill between the holes to make sure that it's definitely 0.6. So
that's generous.
It's really, red flags because if you can't trust the ore body,
it's like Boss Energy. That's exactly kind of what happened over there is they reported a resource on the back of drilling. Turns out not actually a resource.
So your mine plan's cooked.
So your mine plan's stuffed. Your PFS is stuffed. Everything's stuffed, essentially back to square one.
Yep.
You've got to figure out what you've actually got there and if it's actually usable and recoverable to the degree that you originally thought. So
Antipa's all around this thing.
Well, it's 35 k's north.
35 k's north. It's got grade that's
3 or 4 times as big.
3 times as better, which is really significant, especially when it's mostly open pittable, bit of underground. So you could track this down to Greatland's underutilised 20 million tonnes per annum mill. And instead of having to guess whether you're talking 0.6, 0.5 gram a tonne, some of the stockpiles are 0.3. You blend in this high-grade stuff, it'll be super profitable for them. They could buy Antipa by diluting by just 15%, and they've got a bucket load of cash. So you could throw in a cash kicker. It just makes too much sense. And now Greatland's reputation is, everyone's going to be looking at the next quarterly report.
32%.
Yeah, so they've got real question marks to answer now.
Management will be under pressure.
And management...
That's only in 6 weeks or something.
That's what I'm saying. Yeah. This thing was so hot. It jumped. I saw June Bay Lou talking about it and I was like, what business is June? Every fund manager was talking about it, right? They're all out there, Greatland Gold, Fire Trail all over it.
Good deal of the century, which was a good deal. And management's built their reputation from Northern Star doing these kind of deals. But they've built their reputation doing deals, not mining 0.5 gram a tonne stockpiles.
Yeah.
So they should do this deal for Antipa is kind of the point there.
Yeah. So, it was $7. Well, this is the honourable Google Finance, $7.30 down to under $5.
Yeah, and wouldn't be touching it here either.
I wouldn't buy it either.
AZY should be the takeover target. What's the market cap of AZY?
What's the trading at, Benny?
59
cents?
59 cents. It's about
360?
50.
I was going to say 400 mil, I reckon, fully
So yeah,
diluted.
if
And
you
you
get
can
a
pay 600 mil for this now and make it stack up
You
economics.
pay 800 million bucks for this and make it stack it up. I can tell you right now, I don't think this sells for less than $1 because I reckon the board position that the guy they put on today is a Creasy rep. So Mark Creasy's the guy who was the main kind of discovery geo on this, famous billionaire geologist from WA. If you're not from WA, you won't have heard of him. If you are, you'll 100% know who I'm talking about.
Yeah. Sounds like another actor.
He just put another geezer on the board. Really good board appointment actually. And he's got Oppies at
83 cents strike price. Current price is 59.
Guarantee it's going for more than 83 cents.
So you ain't going down to 83.
No, be $1.
Yeah, well. So even at $1, you guys think the math checks?
Massively.
Stacks up easily 90 cents to $1 and it'll be a good deal.
It'll be a great deal for
Greatland.
Greatland Gold. Fantastic deal. Like way better than the deal they've done buying this off Newmont's, Newcrest, whatever it is they bought it, whoever they bought it off.
Wowza. So it was 11 cents a year ago, Antipa.
Oh, I mean,
Well, because it had, there's no reason to own it unless you have Telfer that needs feed, and Newmont was just running it dry because it's been going for 70 years or something, 60 years, can't remember.
Wow.
But
now-
once a deal happened, then it's
Game on
new
for
owner,
Antipa.
and they've got these ROM stockpiles essentially, and then big gap in 2-3 year gap in production to their main asset Havieron.
Which
We think Havieron, their work program / planned production from that is
aggressive.
Let's call it not conservative, right? Generously not conservative.
Yeah.
So we think, and you can just slot Antipa in, and the main delay for Antipa getting into production in 2 or 3 years is really permitting, and because of how close it is to the Greatland Gold ground, it's actually already permitted under the Greatland Gold.
Well, it's under the existing native title.
Under the
agreement.
existing native title agreement. So if Greatland Gold owned it, they wouldn't have to get native title.
So they could accelerate that.
They could accelerate that program a lot. So it just makes it's comically too much sense.
Wow. So you wouldn't take shares from Antipa and chuck them in Greatland?
Hell no. Do the exact opposite.
Just cash, baby.
Exact opposite. Get as many Antipa. Get as many Antipa shares you can get hands on. That'd be my hot tip.
Okay. AZY. Couple of minutes left, gents. I want to call out that we're going to come back hopefully in a few weeks and do a bit of a post-mortem on the old reporting season once we've got a few more results out, and we can maybe throw some confetti around when Antipa gets an offer.
Yeah.
But
I won't be here, mate. I'll be on a European beach somewhere at that point.
yeah, your chance to go
Spending my performance fees.
So if you want to invest in Seneca, you can head to the Seneca FS website. There'll be a link in the show notes. Also, you can book a call if you're a wholesale investor. Get in touch with the team. They'd love to have you. As Luke just said, he's willing to discount massively. No, just kidding. He hasn't said that. Can't discount zero.
I'm just trying to help Owen get his fees up. He needs to learn how to charge people properly.
Make money.
Yeah.
So just quickly on the back end of this, we're in reporting season. People listen to this, their stock's going all over the place. What's not going to work, Benny? If they're here now, they're like thinking, what's not going to work?
High expectations is one obvious one. And things that poor quality products that have been dressed up financially. So one example of a stock that was down 10% this morning, Bravura Solutions, BVS.
Yeah.
Which, as Luke will tell you, is not that good of a product.
If you're a financial planner,
it's the financial planning thing, isn't it?
You go and do a survey of 20 financial planners and see if any of them use Midwinter, which is what
Oh, do they make Midwinter?
Yeah.
Oh.
Yeah, exactly.
Okay.
And the defense rests. So it's not a good product. Not yet, anyway.
There's been this huge cost out story, so profits have looked really good. Stock price has gone up a bit. It's still quite well owned, in our view.
Well owned would be an understatement. Every small cap fund manager in the country is long to the eyeballs. But yeah, anyway.
And it's on 30 times PE, which is the actual relevant metric, even though people quote EV to sales on this one. EV to sales is only relevant when you're talking about high growth businesses that have a lot of operating leverage off a fixed cost base. But
this does not.
If you don't have any revenue growth, then it's a question of how profitable can you get it, which is what they've done. They've pulled that lever. And now it just kind of looks like it's fair price, maybe even overs. So that's one that we're avoiding.
So you're basically saying like, do you ever think about like the rates environment? Like rates have just come down. It's conducive to people take risk on.
Yeah, but you've still got to own the best 20 or 30 companies. Like you've still got to own the best 20 or 30 ideas. It's like, who's a guy trying to give you a hard time about 360 and Qoria? Like, you know.
Oh, yeah. We're getting haters now.
we have plenty of haters.
Fame.
Yeah. But, you know, it's like, 360 had a good result and it went up 10%. You guys said you would, you know, sell 360 and buy Qoria. So, yeah, but in the same time, 360 is up 28%. Qoria is up 58% or whatever the number is, like, you know, twice as much essentially.
Yeah.
So, yeah.
Yeah, and it's kind of missing the point. Like, if you actually read it, it's like, well, we outline our reasoning, and even if we're wrong, you know, 40% of the time, well, great, that still makes us good investors. All the best investors have a 60% hit rate.
Yeah.
And as long as you're actually reading the underlying logic rather than just trying to cherry pick one fact and have a go at us, well,
Yeah.
yeah.
Yeah. Yeah. Well, fair enough. Yeah. You guys are looking at the business, right? And that's what you're using the guide.
And our job's to make the most money, not just make money.
Yeah.
You know, I think if
Can't
you're,
own every stock. Like
if your standard is, I'm trying to invest to make money, well, you're not a very sophisticated investor.
Yeah.
You're not thinking about your benchmark. You're not thinking about, you know, the risk reward that you're taking, and you're certainly not thinking about being one of the best in the industry at what you do, which is kind of what we're trying to do.
Yeah. Yeah. 100%. Anything else you call out?
Can I call out one more? GQG, you may have seen their share price fall, or you may not have 15% or so on a little sniff of an outflow. Can I call out Luke's expertly timed?
No, this is some of our best work, some of the best you'll see. This is some of the best you'll see. This is really
Outflow
sharp.
from GQG straight into Seneca, right?
I'll take the money, but no, Benny, do it. I don't want to do it.
We've owned GQG for a while. It's, you know, well run, good business, global equities fund manager.
Done well.
Done well. It's paid pretty healthy dividends as well, so adds to the return even more. It's just kind of traded sideways for a little bit. Performance of the underlying GQG funds, which we get every month into our inbox, started to drift a fair bit below benchmark. So we sort of started thinking...
too defensive in their global equity strategy, so didn't have enough kind of Mag 7 essentially, right?
Sort of style.
Which I don't blame him. It's not like a terrible process, but that's his process, right? So,
and so we thought, these fund managers, as soon as you drift under benchmark, there is a risk of outflows. So combine that with the BDMs chasing up Luke to try and do a webinar with GQG, and we thought, geez, there might be outflows on the horizon here.
Normally when you get invited to a webinar for a fund manager who never runs webinars, at a time when they're like 10% under benchmark, they're getting redemption requests and they're trying to stem the tide.
Yeah.
And so, so I just said to Ben, I think these guys are getting outflows. We need to cut this GQG position. And
because even though it's cheap, as soon as you get outflows as a fund manager, it's the Magellan thing. People start to price it in terminally.
It's not true, and there'll be a good buy in GQG at some point in the future.
Yeah.
But right now, it was a good sell. I think we sold it for like $2.10
or whatever.
No, more.
Oh, sorry.
Yeah,
that's
over $2.
It's
like $1.80, $1.75 now, something like that.
Yeah,
but, not a bad business. Like you're not going to lose your money. You're not going to lose your shirt there or anything like that. And it's certainly not Magellan. But it might have another 3 to 6 months of kind of weaker flows. While they arrest the performance, which they'll probably do. They're smart.
Cool. If you're looking to hear more from Ben and Luke, can you write into us, courtesy of the link in your podcast? Leave us a suggestion of companies or company that we might be able to have a look at. These guys specialize small mid caps. So send us in some ideas if you want us to have a quick look ahead of the next catch up. It'll be great. Reporting season's coming in fast. So get in the inbox, get in there, the link there, and let us know. But also, if you do want to invest with Seneca, I mentioned it before, get in touch with the guys at senecafs.com.au. Luke, good to have you back in the studio, mate.
Pleasure, mate. Always fun. And
Benny, always more fun when you're here. Glad you're back from Greece, mate.
We need him back.
Yeah, cheers, lads. Thanks for watching this episode of the podcast. If you want to hear more from us, you can get daily videos and podcasts on Rask's YouTube channel. Or if you want to enroll in a free course on investing, property, business, money, you name it, you can join over 34,000 other students and enroll in a free course on the Rask website. Simply head to www.rask.com.au and follow the prompts. Thanks for watching this Rask podcast.